Guys, this is S&P 500 weekly technical analysis for the week of August 5th. In just 15 days, S&P 500 has given up 6.5%, NASDAQ has given up 11%, and Dow Jones has given up 5%. And now NASDAQ has entered into the correction. Correction means 20% to 25% fall. But in case of the S&P 500, it is already 6.5% down. And because of this 6.5% fall, the door to 10% partial correction is now open in the S&P 500. And as of now, only Dow Jones is the most sustainable index. Now that these conditions are clear, but the question is why there was this very heavy fall on August 1st, even though on Wednesday, Federal Reserve Chairman has indicated that there may come a rate cut as early as September if the situation demands. And this becomes more important because this candle, especially on Thursday, was responsible for the 6.5% in the S&P 500 and more than 10% means 11% in the NASDAQ. So the reason was the Federal Reserve Chairman himself. His tone, his words, his everything, all of the comments simply increase the confusion in the stock market. And whenever the stock market goes into the confusion, it goes bullish because the confusion triggers the speculation. So this has increased the speculation, bullish speculation, and that is why the entire US stock market went heavily bullish. However, in terms of the numbers, it was very much clear that S&P 500 is going to sustain above the trend line and it will sustain bullish. But there was no certainty, no guarantee that the S&P 500 can sustain and close above 5531. And this 5531 is actually the bearish trigger. And the same I mentioned to my Patreon community member that even in the best to best case scenario, S&P 500 will remain restricted to 5550 in the bull side. And on the same day in my final update to my Patreon community members, I mentioned that if the S&P 500 is if the closing of the S&P 500 is seen in between 5531 and this was a little zone and the trend line, and then there was this small support zone, and that will then disallow the continuation of the bullish movement or the bullish retrace that we have seen. So in the short term, I've calculated 5531 and I found that 5531 is going to act as a very strong barrier, and if the S&P 500 fails to give a closing above 5531, in that case, there won't be any more bullish movement. Rather, there will be the continuation of the bearish movement and then 1, 2 and third round of selling will be there in the picture. Now, other than that, 5312. What was 5312? This was 50% of the Fibonacci retracement level, which was supposed to come into the picture once the S&P 500 trades below 5396. And what was 5396? 5396 was the 38.2% of the Fibonacci retracement level. Now the question is that what is going to happen to the S&P 500 in the coming week or weeks? 5226 is the 61.8% of the Fibonacci retracement level, as well as this is my strong support level. So this makes 5226 very special, very strong. And now the boundary of the Ichimoku cloud is also very near to the 5226. This means that there are three factors, and because of these three factors, 5226 is now very, very important. But whatever will happen or whatever is going to happen on the daily basis, I will keep you posted through these daily precise updates of the S&P 500 if you are my Patreon community member. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. So guys, I will discuss each and everything in detail in this S&P 500 weekly technical analysis. But before that guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. Weekly chart means the long-term picture, the big picture for a month, for a quarter or so. On the weekly chart, definitely there is some change, some important change, and that is the MACD. MACD has turned bearish. And why this is important that the MACD has turned bearish on the weekly chart? Because the stochastic RSI is also bearish. And if you have subscribed to my YouTube channel for last many months or years, then you know that whenever both of these are in the same direction or in the same condition, then that becomes the direction of the stock or the index. Other than that, the closing is inside the moving average. So I will discuss everything here on this the weekly chart, and I will show you technically that why we are anticipating more fall. Now the second point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart, clearly we can see, okay, everything has changed or is changing into the bearish side. So now, yes, there is a problem in the bearish side movement, and the problem is S&P 500 is expected to hit the saturation in the bearish side in next 1 or 2 days. Okay, because when it hits the saturation, then it will be compelled, it will be forced to give a heavy bullish retrace. Okay, which can trigger the short squeeze, right? So I'll discuss that here on the daily chart. Third and the last point of the agenda is the probable movement of the S&P 500 from August 5th, which is Monday, to August 9th, that will be Friday. So just like last week I've discussed 5331 and the trend line, this is a small zone. Above this zone, a sustained movement above this zone means 5670. A sustained movement below this zone or a failure to cross this zone means 5312. Okay, this was very simple. And what will be the factors that can trigger 5670 or 5312, that also I have discussed here, right? Similarly, I will discuss that what we are anticipating in the next week and why the Ichimoku cloud, why 5226, and the saturation through the stochastic RSI. So if everything is seen at the same time, then be ready to see a heavy intraday movement, 2% or 3% heavy intraday bullish movement. I am saying bullish, not bearish, bullish movement. If everything happens at the same time, because this will then trigger short squeeze and 2-3% next day. So within 2 days, it can gain around 4% or 5%. That kind of heavy short squeeze. Okay, provided everything happens at the same time. If not, then any bullish movement will be limited. Okay, I'll disclose the numbers and everything. And guys, once again, let me remind you that when I say the probable movement, this does not mean that I'm going to discuss the probable movement only in this the last point of the agenda, right? But I also discuss the probable movement here in this the weekly chart section and also in this the daily chart section. Okay, because the candles are very important. That is why I recommend you to watch all of these the 3 sections to understand what is going to happen in the next week, how that is going to happen, and why that will happen. Now guys, I'm going to begin with the first point of the agenda, and this is the S&P 500 technical analysis on the weekly chart. Now guys, we are here and this is the weekly chart. W as in weekly chart. Okay, weekly chart means one candle represents 1 week. Now whether you are technical or non-technical person, I am going to give you 10 seconds to find a recognizable pattern on this the weekly chart. Now if you have found this pattern in just 10 seconds, then please mention that in the comments. So why I wanted you to find these 2 patterns? What purpose it is going to serve? So before I do that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the SP500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now you should understand, in the stock market, patterns work more than anything. This means that when we measure the candle from top to the closing, in that case it is almost 5.7%, and when we measure the candle from top to the closing, again it is 5.7%, right? Number 1. Number 2, what happened after this thing? Heavy bullish retrace. Heavy bullish retrace. Now this time the situation is different, a little different. Okay, Why and how the situation is different? Because when we have seen this pattern and then this the heavy bullish retrace back in April, that time the economic conditions were not as bad as they are in the month of August. Because recently whatever data was published, it indicates that inflation is holding. Okay, there is some improvement but not much, but at the same time unemployment rate is moving up. Okay, and recently we have seen that Intel has fired 15,000 people. Intel. Okay, and yesterday Intel was almost 26 or 25% down, right? And it is not just Intel, all of these, the Fortune 500 or the big or the small companies, they are firing the people. So unemployment rate is moving up, jobs available in the market, that is going down. Recently data indicates retail sales. Okay, and the best example is Amazon. If you look into Amazon, okay, Amazon, Walmart, Target, okay, retailers, online retailers and the offline retailers, they are seeing the pressure, and all of this simply driving down the economic activity. And this is fulfilling the goals of the Feds, because Feds wanted the labor market and the inflation to cool down and to come in the better balance. And why I'm discussing this, the Fed's rate cut and everything, even though we know that there are chances of seeing this bullish movement because of the pattern that we have seen. Feds have started to raise the rates, and then almost for 1 year or more than 1 year, Feds have not increased the rates. Okay, they have kept the rates steady. The result of that rate hike means back in 2022 or in early 2023, is now seen on the economy. This means that if the Feds go for the rate cuts, even if they go for the rate cuts aggressively and back to back, then this means that the real impact of this rate cut will be seen after 1 year. What does that mean? This means that correction or recession. So I think in February or March this year, I mentioned that in year 2024, we are expecting minimum a correction of 20% or 25%. But the only problem is that when this is going to happen. But most likely this will happen when the economic situation will deteriorate. This time again, considering the pattern, definitely, okay, we can expect a bullish reversal. And there is also a reason, 5312 is the reason, because 5312 was the 50% of the Fibonacci retracement level. Okay, and also it has reached to my strong support zone, which includes the 5312. And that is why yesterday in this update I mentioned here that even though there is extremely heavy bearish pressure, S&P 500 is more than 2.5% down, but because it has reached to the zone, this means that either the S&P 500 is going to spend time here at or around the zone, or it will get a bullish retrace, but any bullish retrace will be limited. These are the only two cases, and there won't be any third case. So that is why it perfectly aligns with this condition, a bullish retrace, right? Now to what levels it can be seen, this will be clear through the daily chart, right? So I hope this, the pattern, this thing, percentage, okay, everything is clear, and the long term, the correction or the recession. So now it doesn't matter whether the Feds will go for the rate cuts or not, because eventually the economic situation has started to deteriorate, and it will now take many months, okay, or more than a year to come back to the levels, okay, where it was, or because the impact of the rate hikes is now being felt in the economy after 1 or 1.5 years. So the impact of the rate cuts will be felt again after 1 year or so. Okay. Now let's talk about this, the Dow Jones, just the last candle, okay, heavy bearish candle, but the Dow Jones managed to sustain above the moving averages. Okay. So Dow Jones is only 5% down. And if the market sustains, if the S&P 500 sustains, if the NASDAQ sustains, then it will be because of the Dow Jones, right? And guys, one more thing, let me show you. This is the pattern that I've discussed here, okay? And if you have subscribed to my YouTube channel for last many months, then you know that when this kind of pattern was seen here, Then also I mentioned that, see, there was a bullish retrace. So we are expecting a similar kind of bullish retrace, and any more fall will be contained. Okay, and this was further confirmed through the daily charts. Now technical indicators, if you notice, Bollinger Bands bullish, moving average is clear fan out. Okay, kind of bullish but neutral. Okay, Ichimoku cloud bullish. Okay, here everything looks bullish. The only problem is the change in the MACD. Now MACD is bearish. Okay, last week I have mentioned and I clearly said 100% MACD will turn bearish, because last week it was at the junction. The only case when we can see that that MACD is not giving a bearish crossover, only and only if there comes a heavy bullish movement, S&P 500 trades above 5,600. Now, so MACD is bearish, stochastic RSI is also bearish, also S&P 500 is now out of overbought and the saturation. So all of this indicates that the S&P 500 is now 50-50, means neutral. It is now neutral on the weekly chart. Although it is neutral, but this neutral is in the bullish side. Okay, neutral means it can go bullish or bearish, but this neutral, it contains the bullish sentiments, not the bearish sentiments. Okay, because of the moving averages, Ichimoku cloud, and these other technicals. Okay, but definitely the S&P 500 and the market is under pressure. This means that there is no confirmation or there is no guarantee that the next week S&P 500 will be seen in open equal to low condition. Means immediately upon open it moves up. No. Okay. And yes, one more thing I forgot to mention here. This was that this candle does not confirm, or this kind of closing does not confirm any gap up or gap down open. Okay. So guys, I hope pattern is clear, numbers are clear, bullish retrace, bearish, fads, recession correction is clear. So guys, before I discuss the daily chart, I want to share this information with you, that this is my stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Now through this program, I teach the movements, strategies, analysis, trend, predictions, okay, means even before it happens in the stock market, support and resistance levels, and much more. The motto of this program is to help you become self-reliant so that you can trade by yourself confidently without needing any external help, right? And this program is delivered one-on-one basis only. And whatever you are going to learn here will be applicable to any stock, any index, any currency, any commodity, any crypto, or anything that is traded in the stock market. This is my email address, which I've also mentioned in the comment section and also in the description of this video. And this is the Google spreadsheet. More details are there in the Google spreadsheet. And when you open this Google spreadsheet, then you will see that I mentioned each and everything from basics to advanced, what I'm going to discuss, options, premium calculation. So when I say premium calculation of the options, I mean live calculation through the option premium calculator. I will teach you how to use that calculator and how to predict the option premium price, okay, very well in advance. Okay, and other than that, the support and resistance levels and limits, trend of the stock market, how to deduce that trend, how to know even before the things happen. Okay, and all of these are things, and these are some important terms and conditions, and these are the snapshots of the meetings. So guys, whenever you want to participate in this program, or if you have any questions, then this is my email address. You can simply send me an email. And also I've given the link to this program in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda, and here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day. Okay, not 1 week or 1 hour. Now let's first discuss the candle. But guys, before I discuss the candle, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you like this video, then hit like. And if you're looking for these daily precise updates of the S&P 500 every day from Monday through Friday to trade carefully in the stock market and to know even before the things happen, then I've given the link to my Patreon community in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now, this is the candle. It's a good bearish candle, but it's not a heavy bearish candle because in last 1 hour or in last 30 minutes, we have seen a reversal which has actually helped the S&P 500 to close at 5346. And because the closing was not absolute and also lower level charts and the weekly chart is not supporting the same, that is why the gap down open is also not confirmed. Okay, so just like the weekly chart, a gap down or gap up open is not confirmed, but what is confirmed that irrespective of anything, we are expecting the continuation of the bearish movement or the pressure. Okay, and when I analyze this, the candle of the Dow Jones, then you can notice it was in open equal to high condition. Open equal to high condition means immediately upon open it came down and it failed to breach its open price. So this does not mean that there will be a gap down open. No, because the closing it was not at absolute. Secondly, what it indicates is that irrespective of anything, there will be the bearish pressure. This means that open equal to low condition is not expected in the next week, right? So candles are clear. In terms of the patterns, I will not say that there is any specific pattern, okay, just like it was there on the weekly chart. So there is no specific pattern to that. But yes, what it also indicates that S&P 500 has now entered into the Ichimoku cloud, and this is happening after April. So this means that now the S&P 500 is expected to come down to 61.8% of the Fibonacci retracement level, and also the upward movement will be restricted to the boundary of the Ichimoku cloud itself. This means that we cannot rule out that there will not be any bullish retrace. There can be a bullish retrace, but this bullish retrace will be limited. And in the similar manner, this is the lower boundary of the Ichimoku cloud, right? Now let's talk about the technical indicators. Now in terms of the technical indicators, bearish fan out in the moving averages, and this is the change. S&P 500 is bearish through the moving averages. S&P 500 is bearish through the Bollinger Bands. S&P 500 is neutral through the Ichimoku cloud. And clearly S&P 500 is bearish through the MACD. And yesterday only on Friday, S&P 500, the stochastic RSI has changed or has turned to bearish, right? So everything is bearish, but at the same time it is neither saturated, not overbought or not oversold. Okay, so all of this indicates that the S&P 500 is now 80% bearish. But does that mean that the trend has changed? Yes, the trend has changed on the lower level charts, but not yet on the daily chart. Because for the trend to change on the daily chart and S&P 500 to come into that, the correction of 20% or so, S&P 500 must trade below the Ichimoku cloud. Okay, and that is the last thing pending. That is the last and the only thing, okay, and nothing else. So this is the case here. Now Dow Jones. Here in case of the Dow Jones, there is no such crossover in the moving averages, but it is closing, but because it has closed below the moving averages, so moving averages are neutral, and Ichimoku cloud bullish and Bollinger Bands bearish, and here MACD is bearish, stochastic RSI is bearish, neither saturated nor overbought nor oversold. Okay, so these are the conditions, but Dow Jones is in much better shape as compared to the NASDAQ or the S&P 500. NASDAQ is going to change the trend. It is just at the margin line, just this the margin line. Okay, but so it will be the NASDAQ, okay, which will actually change the trend. Okay, first and then S&P 500 and then the Dow Jones. So here the Dow Jones will be seen as only 60% bearish, whereas on the weekly chart, the Dow Jones, okay, the Dow Jones was 75% bullish, and this means that whatever bullish support S&P 500 is going to get, it will come through the Dow Jones and not through the S&P 500 itself. But whatever is going to happen or whatever will happen, I will keep you posted through these daily precise updates of the S&P 500 if you are my Patreon community member. And guys, if you have not yet joined my Patreon community, then let me tell you that along with these daily precise updates of the S&P 500 every day from Monday through Friday, I also give these the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 opportunities every week. So whenever you want to join my Patreon community in order to get these daily precise updates of the S&P 500 every day from Monday through Friday, as well as the stock market opportunities, then I've given the link to my Patreon community in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will see that there are these two tiers. This is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. So other than the geographical location, there is no other change. So whenever you subscribe to either of these, then you will be getting daily S&P 500 analysis, updates, probable movement, and the opportunities minimum 5 to 10 every week. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, as well as the stock market opportunities. And they are very well aware of what is expected to happen in the stock market and how that is going to happen and why that will happen. So guys, whenever you want to join my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 for the next week, which is from August 5th, means Monday, to August 9th, that will be Friday. So now you should understand that next week is kind of blank. Blank means in terms of economic data, there is nothing as such. Okay, and also the earning season is now over for the S&P 500 and the NASDAQ. All of the primes have posted their earnings: Apple, Amazon, Microsoft, Google, and all of these the primes, right? So this means that now the technicals will take over, technicals, patterns, okay, and the sentiments. So I will discuss the chart accordingly. And guys, once again, let me remind you that when I say the probable movement, I have already discussed the candles, especially the pattern on there's a bullish reversal pattern on the weekly chart, okay, and then the daily chart. So I've already discussed some of the probable movement in the weekly and the daily chart section. So if you have skipped that part, or if you have not yet watched those two sections, then it is recommended that you should watch those two sections. So now in terms of the probable movement and the numbers, okay, what we know is that 5, 2, 2, 6. Now, number one, it's the 61.8% of the Fibonacci retracement level. Number two, it is my calculated support level. Number three is that if the S&P 500 continue there's a fall or there's a bearish movement, then in the next week the boundary of the Ichimoku cloud is also very near to 5226. Okay, Ichimoku cloud. These three factors makes 5226 very special. Very special in a manner that if this fall continues, then 5226 has the potential. Okay, it is not just 5226, there is just one more level, okay, through which the 5226 will create this the heavy support zone. Just like 5312 was there, and 5312, and there was just very near, there was one more level, and this has created the zone, and that has compelled the S&P 500 to not to fall, rather to get some bullish retrace. Similarly, okay, here also. Okay, but you should focus on this, the 5226, okay, and 0.2%, 0.25, 0.1% movement, okay, or a breach of this is fine, perfectly fine, not a problem. Okay, this means that if on Monday, Tuesday, okay, means if this the bearish movement continues and there comes no bullish movement or very limited bullish movement, and if that remains limited or below to the high of this candle, which was 5384, Okay, in that case what will happen, this the bearish movement, this the fall will continue and it will come down from the last closing to this 5226, which will be around 2%. 2% is fine because yesterday on Friday it gave up 2.5%. This means if there comes 2% fall on Monday, then on Monday itself it will hit 5226, right? So 5226 is very important. If it comes down without giving any bullish reversal, in that case 5226 will act as a very strong barrier in a manner that S&P 500 will then be compelled to give a bullish retrace or a heavy bullish retrace. And when it comes down in this manner, then the lower level charts will hit the oversold condition, and also stochastic RSI on the lower level charts will hit the absolute zero. So that condition plus 5226 plus all of these conditions will force the S&P 500 to not to fall, rather to get this the heavy bullish retrace. So now everything depends on this 5226 or this the support zone that is there, okay, around this the 5226. So if you are my Patreon community member, then I will keep you posted through these the updates. And guys, if you have not yet joined my Patreon community and if you want to get these the daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And also guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have liked this video so far, then hit like. Now question is that under what circumstances S&P 500 can lose the 5226, because here we can see 200-day EMA, 200-day EMA. Okay, it is currently around 5050 or something like that. So under what conditions it can come down, and it can come down to hit the 200-day moving average? The conditions will be very much clear. There must come two consecutive closings below 5226. Once there comes two closings below 5226, and even if there comes one closing below 5226, then that will simply confirm that now the S&P 500 is out of the technical obligation of the Fibonacci retracement. And now 61.8%, 50%, these levels will not be applicable. That is why I am saying 5226 is important, because if there comes a bullish retrace, then Fibonacci retracement level has the potential to throw the S&P 500 back to 5312 at least. So now if there comes two consecutive closings below 5226, at the same time lower level charts are neither oversold nor saturated in the bearish side 00, okay, then that will allow more fall in the S&P 500, and finally it will be coming down to 5050, and it is, see, then it will not be around it will not be about 5050, it will be about 20% correction. So that is why this 5226 now becomes more important, because 5226 is also going to define whether the S&P 500 is going to enter into the 20% correction or not, right? So it all depends. 5226 is very important in the next week. Now there is one more thing, okay, all of these things are there. Now there is one more thing. Once the S&P 500 loses the 5226, okay, two consecutive closings, successive closings below, in that case the trend will change. The trend will change. The trend change will be there from bullish to bearish, okay. Then it will enter into the bearish trend, and that is why 20% correction that we are talking about, right? However, I've shown you a pattern on the weekly chart, okay. Now let's discuss that pattern, because that is the last ray of hope, okay. Losing that pattern means nothing is going to work for the S&P 500, okay, and then 20% or 25% correction. This is something, okay, I've shown you that there is a pattern 1 2 3 1 2 3, fourth bullish on the weekly chart, okay. I'm not going to discuss that in detail. Now if that pattern is repeated, because generally in the stock market patterns are repeated, Okay. If that pattern is repeated, in that case, what will happen? S&P 500 will come down. Definitely, it will come down. Okay. Yes, there is one more thing. When the S&P 500 will move to 5226, only when it loses the zone. What zone? This particular zone. This zone. Okay. 5312, and there is one more. There is the support level, heavy support level. Once the S&P 500 loses this zone, then only we will say now 5226, that now the 5226 will come into the picture, and fourth round of selling will be seen. See, this was first round of selling, this was second round of selling, this was third round of selling. Fourth round of selling will come when the S&P 500 loses the zone, gives a closing below the zone, or even if it breaches the zone, gives a closing at or above the zone, then that will also open this the next the 5226. Okay, movement to 5226. Okay, clear now. So that will be the fourth round of this selling. Yes, this means that because of this pattern that I have shown you on the weekly chart, if that pattern is repeated, then what will happen? That on Monday, irrespective of anything, S&P 500 will come down. Okay, even if there comes a gap up open, then also it will give some bearish movement, gap down also. It will come down. It will sustain at the zone. It will sustain at the zone when the pattern is repeated. It will sustain at the zone. Once it sustains at the zone, a bullish reversal. Bullish reversal to what? Bullish reversal to the boundary of the Ichimoku cloud. Okay, so whether you are technical or non-technical, okay, just understand this thing, that this is the Ichimoku cloud, and the boundary of the Ichimoku cloud always act as the support and resistance level. Okay, and guys, my technical indicators are the modified technical indicators, which is why whatever you are seeing here, okay, it might look different in your charts, because I have modified and I have fine-tuned my technical indicators, and I share all of that. These are technical indicators and everything through this program. So now any bullish retrace is expected to be limited to or around, because although Ichimoku cloud acts as the boundary of the Ichimoku cloud acts as strong support and resistance levels, but most of the times the Ichimoku cloud fails to contain at the exact level. This means that if we are expecting S&P 500 to hold exactly at this level, then no, it will breach, but eventually it will be having potential to retrace and to close above the level. Okay, this is how it works. So it will be just very near to this level. Anyways, so whenever it moves up, in that case, what will happen? So the boundary of the Ichimoku cloud, it also comes very near to what? Very near to the 50% of the Fibonacci retracement level, that is 5395 or 5396, I guess. That was this 50% retracement level. This means that any bullish movement or reversal is expected to be limited to or around this. Okay, only if there comes a closing above this 50% retracement level, 5395 or 96, a closing above, in that case it can move up further, but now the moving averages will weigh heavily and will not allow S&P 500 to move up any further. Means this movement will then be limited to 5400 something here, okay, in this the moving averages in this zone. So bullish movement is expected to be limited, bearish movement is also expected to be limited, but conditional to 5312, and that this is the zone. Okay, and also the trend will change once there comes two successive closings below the 5226. When the trend changes, then 5000, in simple words, 5000. Okay, that's 5000 will be there in the picture. And remember, it is not actually 5000. Then what is it? It is 4818. Because see, there was a gap. Okay, this was 5376. I've cleared this the 5376 here in this the previous S&P 500 weekly technical analysis in very detail. So 536 was this the gap fill theory. Okay, so it was confirmed that whenever it comes down 5376, 100%, 200% it will come into the picture. Okay, once it closes below or trades below 5376, then 5312 will come into the picture. So similarly, there is a technical obligation to 4818. Okay, so that is long pending. So whenever it comes down near to 5000, then it will not come down to 5000, but it will be coming down to 4818 to fulfill its technical obligation. So this means 5226, the zone, this, the 5396, the moving averages, strong resistance, very, very strong resistance zone. And no, now 5376 is not in the picture. Okay, just forget about it. Here 5226, and after 5226, then a free fall and the change of trend, and also 20% correction. Most likely it will enter into that 20-25% correction. But whatever will happen, I will keep you posted through these, the daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday. If you are my Patreon community member, and if you have not yet joined my Patreon community, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, hit like if you have liked this video, and subscribe to my YouTube channel if you have not yet subscribed to my YouTube channel. So guys, this was my S&P 500 weekly technical analysis for the week of August 5th, means from August 5th, which is Monday, to August 9th, that will be Friday.